Historic buildings are tangible links with the past. They help give a community a sense of identity, stability, and orientation. The federal government encourages the preservation of historic buildings through various means. One of these is the program of federal tax incentives to support the rehabilitation of historic and older buildings. The Federal Historic Preservation Tax Incentives Program is one of the federal government's most successful and cost-effective community revitalization programs. It has leveraged over $96 billion in private investment to preserve 44,341 historic properties since 1976. The tax incentive promotes the rehabilitation of historic structures of every period, size, style, and type. They are instrumental in preserving the historic places that give cities, towns, and rural areas their special character. The tax incentives for preservation attract private investment to the historic cores of those cities and towns. They also generate jobs, enhance property values, and augment revenues for state and local governments through increased property, business, and income taxes. The preservation tax incentives are used to create moderate and low-income housing in historic buildings. Through this program, abandoned or underused schools, warehouses, factories, churches, retail stores, apartments, hotels, houses, and offices throughout the country have been restored to life in a manner that maintains their historic character, while they're made compatible for their new modern use. So, what is a tax credit? First and foremost, let's answer that question. A tax credit differs from an income tax deduction. An income tax deduction lowers the amount of income subject to taxation. A tax credit, however, lowers the amount of tax owed. In general, $1 of tax credit reduces the amount of income tax owed by $1. The 20% rehabilitation tax credit equals 20% of the amount spent in a certified rehabilitation of a certified historic structure. The Federal Historic Preservation Tax Incentives Program is jointly administered by the U.S. Department of the Interior and the Department of the Treasury. The National Park Service, or NPS, acts on behalf of the Secretary of the Interior in partnership with the State Historic Preservation Office, or SHPO, in each state. The Internal Revenue Service, IRS, acts on behalf of the Secretary of the Treasury. Certification requests, those are the requests for approval for a taxpayer to receive these benefits, are made to the National Park Service through the appropriate SHPO. Comments by the SHPO on certification requests are fully considered by the National Park Service. The 20% credit is available for properties rehabilitated for commercial, industrial, agricultural, or rental residential purposes, but it is not available for properties used only and exclusively as the owner's private residence. There are 4 requirements that can help you decide whether your rehabilitation project would meet the basic requirements for the 20% tax credit. The building must be listed in the National Register of Historic Places or be certified as a contributing element to the significance of the registered historic district. Buildings may be listed individually in the register or as part of a historic district. If your property is located in a National Register district, it still must be designated by the National Park Service as a structure that retains historic integrity and contributes to the historic character of the district, thus qualifying as a certified historic structure. Not every building in a district is contributing. The project must also meet the substantial rehabilitation test. In brief, this means that the cost of rehabilitation must exceed the pre-rehabilitation cost of the building. Generally, this test must be met within 2 years or within 5 years for a project completed in multiple phases. The cost of a project must exceed the greater of $5,000 or the building's adjusted basis. And the following formula will help you determine if your project will be substantial. So it's A minus B minus C plus D, and that equals your adjusted basis, whereby A is the purchase price of the property, that's the building and land value, minus B, the cost of the land at the time of the purchase, minus C, which is the depreciation taken from the income-producing property, plus D, the cost of any capital improvements made since purchase. Those raise your basis. The other two items lower the basis. So A minus B minus C plus D equals the adjusted basis. The rehabilitation work must be done according to the Secretary of the Interior's standards for rehabilitation. These are 10 principles that, when followed, ensure that the historic character of the building is being preserved while it's made compatible for its new modern use. The standards are applied to projects in a reasonable manner, taking into consideration economic and technical feasibility. After rehabilitation, the historic building must be used for an income-producing purpose for at least 5 years. Owner-occupied residential properties do not qualify for the federal rehabilitation tax credit. However, if a portion of a personal residence is used for business, such as an office or a rental apartment, in some instances the amount of rehabilitation costs spent on that portion. There are some additional factors that determine if a property is eligible for this program. So the 20% tax credit for historic preservation is meant to preserve historic buildings and not to create buildings that look old but that are in effect new buildings. Thus, the credit is not available if the building does not have sufficient historic material to preserve at the outset of the rehabilitation. Once the integrity of a building has been lost due to deterioration, damage, or previous alterations, it can never be regained. With new material, you can copy significant features, but the material integrity itself can never be recreated. It's important to select a building for rehabilitation that retains its basic physical integrity before the rehabilitation. Some historic buildings have been covered with non-historic surface coverings that obscure the building underneath. In these cases, it will be necessary to remove the covering to make sure that there's enough historic building material remaining and that the building still qualifies as historic. Be cautioned, however, that some of these non-historic surface coverings are becoming historic in their own right and are acquiring their own significance. So before moving forward with removing any historic material from a building, make sure to consult with your state historic preservation office. So farms, mills, and other historic properties often have more than one building. For properties with multiple buildings that were functionally related historically, the rehabilitation certification decision will be based on the effect of the overall rehabilitation on the entire property, not just. Moving a historic building can jeopardize its listing in the National Register of Historic Places, and special procedures must be followed to ensure its continued listing. Likewise, moving a building into or within a historic district may jeopardize its ability to contribute to the significance of the district. If a building will be moved as part of the rehabilitation project, consult with the SHPO as soon as possible. Projects that involve demolition require careful planning to ensure approval, whether whole buildings will be demolished or only parts of the structure. Now, tens of thousands of projects have been approved for the historic preservation tax credit. Observing the following points will make the approval of your project that much easier. Submit your applications early in the project planning process. This will save time and money down the line. Make sure to wait until the project is approved in writing by the National Park Service before beginning any work. Work undertaken prior to approval by the National Park Service may jeopardize certification. In the case of properties not yet designated certified historic structures, apply before the work is completed and the building is placed in service. Photograph the building inside and out, before and after the project. Before photographs are especially important. Without them, it may be impossible for the National Park Service to approve a project. Read and follow the Secretary of the Interior standards for rehabilitation and the guidelines for rehabilitating historic buildings if you are unsure how they apply to your building. And finally, once you've applied, alert the SHPO and the National Park Service to any changes in the project. Claiming the 20% rehabilitation tax credit and recapture of the credit. The owner must hold the building for 5 full years after completing the rehabilitation or lose the remaining portion of the credit. The National Park Service or the State Historic Preservation Office may inspect a rehabilitated property at any time during that 5-year period. NPS may revoke certification if work was not done as described in the Historic Preservation Certification application, or if unapproved alterations were made for up to 5 years after certification of the rehabilitation. The National Park Service will notify the IRS of such revocations. So please note that Public Law number 115-97 amends the Internal Revenue Code to reduce tax rates and modify policies, credits, and deductions for individuals and businesses. Section 13402 modifies the 20% historic rehabilitation tax credit, repeals the 10% tax credit for the rehabilitation of non-historic buildings, and provides transition rules for both credits. These and other changes to the IRC may affect a taxpayer's ability to use the 20% tax credit. Applicants requesting historic preservation certifications by the National Park Service and those interested in the use of credits are strongly advised to consult an accountant, tax attorney, legal counsel, or the Internal Revenue Service regarding the changes to the IRC as it relates to Public Law number 115-97. So for more information on the Federal Historic Rehabilitation Tax Incentive Program, for program applications and guidance, please visit the Louisiana Division of Historic Preservation's website at louisianahp.org and make sure to click on the tax incentives link. If you have any questions, feel free to look for our contact information on the webpage and to shoot us an email or give us a phone call. Again, that's louisianahp.org for all the information on the Federal Historic Rehabilitation Tax Credit Program.